And if you turn to the very last page of the outline, I don't believe it has a number on it. It's actually a page of an illustration, and so it's columns of numbers. And what I want to bring your attention to on the very last page of the outline is the very far right-hand column, where it shows the internal rate of return on the net death benefit. And we've highlighted that column in a black box. And for people who are buying permanent insurance, what this column shows is what the rate of return is on the premiums paid to collect the death benefit in any given year. And that's significant for a couple of reasons. Number one, that rate of return is tax-free, income tax-free at least. And you don't want life insurance to be a tremendous investment. If it's a tremendous investment, it either means the insurance company is way underpriced the policy and they've got, solvency risks, or it means that the person died young. And, obviously that's not what anybody's recommending. What it does, however, is shows what the rate of return is out or near life expectancy. And I share this with you because if you have a client that is looking to purchase insurance and wants your opinion, you should, and it's a more permanent policy, this column can be included in almost any company's illustration. It's very seldom included, and oftentimes the clients aren't given a complete illustration even though they should be. So you should ask for this column, the rate of return at death, calculated all the way out to age 100 or beyond. And that will help you judge whether this insurance is economically viable and from your perspective does or doesn't make sense in your client's planning. It's a very useful tool. We always use it and show clients so they know exactly what the policy performance is as a permanent insurance policy relative to other alternatives. In some cases, these rates of return will be a projection because there will be variables like dividends or interest crediting rates in a universal life policy. This policy happened to be a guaranteed single premium payment. And so the premium was paid and the policy is guaranteed paid up until death. So the only variable in this particular illustration is the date at which death occurs. Everything else is guaranteed. And policies will have varying amounts of degrees of guarantee, and that's part of the analysis that needs to be done because, again, a lot of times this is not real evident to the client.